Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Thursday, 25th day of May, 2017, and this is the Daily Report for Gold and Silver. We have softly higher pricing today in the precious metals across the board, with gold trading up almost 0.2% on the day. When we look at most active futures contract, that is at $12.5530, a net change of $2.20. Very, very narrow range on the day. 53.5 on the low side, 59 on the high. So as you can see, I believe that we are setting ourselves up for a long 3-day weekend and going into holiday mode. Nonetheless, I feel that even the small gain in light of record highs in the equities markets is substantial and shows the resolve of gold to hold within this price point, and I see solid support at $1,250 per ounce. Silver also trading higher on the day, up about 3 cents on the day at 17.14. Again, a very, very contracted range with 17.12. That on the low side. The high side, 17.21. So a very, very narrow range nonetheless. Platinum eking out a nice gain, about 0.3% at 9.50. And then palladium trading up about $5.50 higher at 767.20. So there are two things that really stand out as I look at current gold and silver pricing. Specifically with gold is the fact that we continue to trade above the moving averages that we have on the screen, which are a long-term moving average, that is our 200-day moving average, and our short-term moving average, our 50-day moving average. Now, when we look at today's activity, you can see that the low that comes in just at or above the shorter term 50-day moving average. We can certainly see that on Monday we did get our golden cross in which the shorter term 50-day moving average crossed above the longer term 200-day moving average, and that of course is a very bullish factor. The question, or the key right now, is whether or not that is signaling an extended move to the upside in gold, or what I would call a false breakout. The recent example of a false breakout, or a short breakout, any way you want to label it, is the fact that back in the beginning of April, end of March, we saw gold spike above the 200-day moving average. It had been trading above the 50-day moving average for the better part of March. Here's our 200 once again. But that move was very short-lived, 2-3 weeks, as it plunged back below that in the beginning of May. And that, of course, is the point in which we came down and formed these lows at just above 1210. Now, the other thing that we want to look at when we look at this recent low at 1210 is the fact that when we kind of stand back, and that was my point in my interview with Daniela in Chart This, was that even though we see this market kind of wafting back and forth, when we stand back, we can absolutely define that during this year, we have had a series of higher lows. We've not taken out the highs that we had last year, and that's what I want to see. And the yearly high that we have this year, which sits at 1297, has not been taken out. But we still have time during this year, so that could, in fact, be the way prices unfold. But the fact of the matter is, on the last two lows, we've had now a higher low than the previous low. We are trading above both the 50 and 200-day moving average. And then in terms of our current analysis in the market, the only thing that we can say is that we do have support at about 1250, but we also have, whether you want to call it a flag formation, whether you want to call it a compression triangle, we do have a series of higher lows and a series of lower highs. That means that our range is compressing, and typically when that happens, as you reach the apex of this flag or triangle, what tends to happen is there is a release in pressure and you will get a breakout either to the upside or downside. Now, a flag or compression triangle does not predicate that it will return to the overall or prevalent direction in the market. However, rule of thumb is that it is more likely that it will break to the prevalent direction of the trend, which in this case is up. So therefore, I am looking for the market once it reaches the apex to have a break to the upside. So traders, although we had silver close fractionally higher on the day, we can see some resistance forming on a technical basis that seems to be coming in at around 1725. That, of course, are these most recent highs here. Also, when we look at silver and compare it to current gold pricing, really what we see is we're still trading below both the 50 and 200-day moving average, but obviously that is because this market came under so much more pressure than gold did as it traded lower. Remember that gold did not break into the lows that were below a 78% retracement of the yearly range in gold. Silver did. I believe that silver was extremely oversold. That is why I added it to our trade portfolio when we put our current gold trade on. We also did silver because I believe that there, in terms of a percentage opportunity, there is a much greater percentage opportunity, or at least equal opportunity, in silver as well as gold. In other markets that we follow, very quiet activity with the dollar index, with that closing fractionally lower. I'm going to call it modestly unchanged on the day at 97.14. Very, very quiet day in terms of the dollar itself, but not so quiet in terms of U.S. equities as they all move to new record territory. Dow Jones 21,082. I believe that is a new all-time record high. Standard & Poor's definitely trading to a new all-time record high, up over 0.4%. A 10-point gain at 24.15. And then lastly, the NASDAQ composite, like a runaway freight train, up about 0.7%, up 42 points at a new all-time high, now breaking 6,200 in terms of that ceiling to close at 62.05. You know, traders, amongst the different indexes, whether you're looking at the Russell, the Standard & Poor's 500, or, as in the case of what we're looking at now, the NASDAQ composite, the tech-heavy NASDAQ index has definitely been the one to watch. We can see the kind of dynamic move witnessed this week in the NASDAQ as it blew above former resistance created over the last couple of trading weeks and go into absolutely a new record milestone as it now trades above 6,200 on the NASDAQ Composite Index. Quite a feat. And today marks a milestone in the Standard & Poor's 500 as it breaks above 2,400 for the first time in history, an absolute milestone. Again, we are looking at a weekly candlestick chart. We can see that the 3 prior weeks, we had a close up near that high, although the last 2 weeks it sold off because, of course, on a red candle, your close for the week is the lower end of that rectangle. And this week, we had a resilient move. Traders, in my mind, there's absolutely no doubt, but what we're witnessing in terms of gold and silver prices recently, in light of this tremendous risk-on environment and a fairly subdued geopolitical climate, I believe shows an extreme amount of support at the 1250 area. That, coupled with the fact that the minutes released by the Federal Reserve yesterday showed their steadfast and strong inclination to have an interest rate hike next month in June, and also beginning to lay out that stealth rate hike, in other words, balance sheet liquidation. I think in light of all of these factors, we are looking at a very, very supportive price point for gold in a supportive market. My sense is that as long as gold can remain above its 50 and 200-day moving average, which up till now it has ever since breaking above them on Monday of this week, I think on a technical basis, we are looking at strong support for gold and the potential for higher pricing. Therefore, my recommendation is to maintain our current long position in gold, maintain our current long position in silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review during the weekend review. Bye-bye.